Speaking of crypto, the Department of Labor rescinded some Biden-era guidance that had cautioned 401k plan advisors to exercise extreme care before making that available as a plan option. Our senior personal finance correspondent, Sharon Epperson, joins us now. Sharon, does this mean that crypto is coming to your 401ks?
Well, it's already available in many 401ks, or in some of them. But what it means is that they're pulling back completely on guidance that had been offered by Biden's Labor Department back in 2022, saying that it's important to exercise extreme care with cryptocurrencies because of serious concerns about fraud, theft, and loss. Now they're saying, we're pulling that all back. That's not true. We're going to look at what ERISA says that is supposed to, the act that's supposed to protect 401k investors and our retirement savings. There's nothing in there that says that you shouldn't be in crypto. This is what the Trump administration is saying. And so now that kind of opens the door for those who might have been on the fence about having crypto in their 401k plans of adding that as an option.
A couple of questions. So number one, you know, I could see Bitcoin kind of being offered, but if we start to get into some of the altcoins popping up in these plans, are the plan sponsors going to have any concerns? I don't know if they are. I don't know if the altcoins are there, but would they have any sponsors about kind of lawsuits down the road if some of these coins collapse?
Well, certainly there are concerns about that because plan sponsors, employers have to be fiduciaries. They have to put the best interest of the 401k investor ahead of their own. And so in order to do that, they want to make sure that they're offering an investment that is going to work for the plan participants. But there are various ways that they can do that. It doesn't have to be the cryptocurrency outright. It can be an exchange-traded fund that invests in crypto. They can also do it through a brokerage window that they may have or self-directed options within a 401k. And then for retirement savers who want to do it on their own, they can do it through individual retirement accounts.
Because it's a slippery slope, I think. It's like you get home, you're like, good news, honey, I put all of our retirement into Kelly Evans coin or Epperson coin, right? Because there's a lot of stuff that comes up and goes down.
Right.
So at some point, somebody's going to have to make a decision. Okay, maybe we'll let Bitcoin into some 401ks. Not ours yet. Mm-hmm. Hopefully we're getting there.
I'm sorry to disappoint you.
We missed a run.
That's the thing now we're getting into.
Not that I'm counting at home, but somebody's got to make the decision about how far down the line do we go.
Well, even Fidelity, the largest 401k provider, it does in some plans offer exposure to Bitcoin, no more than 20% or so. But it's important to keep in mind that financial advisors who say, yes, this is great to have an alternative asset class. It's very important to make sure that you can benefit from strong returns. But there's some cons to think about, and that's the high volatility and the high risk associated with crypto. So a lot of the financial advisors that I've spoken with that do have crypto in their clients' plans say no more than 2 to 8%. And it really does depend on your time horizon. Morningstar has an analysis out that says if you're going to be in crypto, you need to be in it at least 10 years to see the fluctuations, be able to ride out those fluctuations in the returns and the volatility that's there. Many people who are trading crypto on their own don't see it as a long-term investment. So that's another kind of mind shift that people need to make. If you're going to have it in your 401k, if you're going to opt to have it in that plan, you need to be prepared to hold on to it for at least 10 years or more.
That's really interesting.